welcome back to Investing Assist. Today we're going to talk about ETFs. What are they and what are some examples of ETFs? So if you're brand new to investing and you're looking around trying to figure out what the heck you should buy, and you ask someone, what should I invest in to start? Sometimes you might get the answer, an ETF. So what exactly is an ETF? An ETF is an exchange-traded fund that is traded throughout the trading day just like stocks, and it's going to fluctuate in price as well. So what are the differences between stocks and ETFs?
Let's look at Apple stock versus VOO, which is Vanguard's S&P 500 ETF. A $100 investment into Apple stock is just a $100 investment into Apple stock. Pretty simple. On the flip side, a $100 investment into Vanguard's S&P 500 ETF is still technically $100 into VOO, but this is where it gets interesting. Because VOO, it tracks the entire S&P 500 index, and its goal is to closely track the index's return. So what does this really mean? Here's a list of the top 10 holdings of VOO. As you can see here, Apple has a weight of 6.44% in VOO. So for every $100 you put into the VOO ETF, technically $6.44 of that is being invested in Apple, and $5.63 in Microsoft, $4.75 in Amazon, and so on and so forth.
Now, why would someone choose to invest in an ETF like this? The main reason is going to be to avoid diversification risk, or putting all of your money into one single stock, and then if that stock falters, then you're out all of your money. So hypothetically, let's just say that you put $100 into Apple stock, and then Apple fails. Not likely to happen with such a great company, but just hypothetically, Apple fails, you're out your $100 because you didn't diversify, you put it all in one company, and then that company failed. On the flip side, had you invested $100 into an S&P 500 ETF and Apple were to fail, you have so many great companies ready to pick it up, you wouldn't lose your entire investment, the value of your ETF would just go down by a little bit for a little bit of time. Now this then raises the question, well, if ETFs are so great, why wouldn't I just put all of my money into ETFs? And some people do, because it's very hard to beat the market. But oftentimes people don't like putting all of their money into ETFs because they don't usually generate as high of returns. Now sure, you have some ETFs that are generated towards high growth, like ARK and QQQ, which I just did a video on a few days back. But for the most part, with an S&P 500 ETF that is tracking the S&P 500, you're not going to see insane growth like you might in an individual stock.
For example, let's look at this breakdown of the past 5 years between Apple stock and VOO. As you can see here, if you invested into Apple 5 years ago, you could have gotten a 392% return by today. On the flip side, if you invested in VOO 5 years ago, you would only have gotten an 83% return on investment by now, which isn't too bad either, as the annual return for the S&P has historically been about 8 to 10%.
So if you find a winning company, then why invest in an ETF? Well, the answer is you just never know what's going to happen with that company. Any negative news could come out at any time. Just look at Alibaba.
Its stock was just over $300 a couple months ago, and now it's suddenly dropped to under $215 due to many growing concerns over company investigations as well as delisting threats. Many people, including me, have been saying that this is a great long-term stock to hold. I still feel that that's the case, but that's the risk you can run into when investing in individual companies.
For me personally, I like to use a hybrid approach. About 30% of my portfolio is invested in ETFs, and then the rest are in individual companies. For those looking for higher growth, individual companies may be for them. Another option may be, like I mentioned, a high growth ETF like ARK or QQQ. I'm invested in both. For me personally, I do invest in individual companies to try and achieve high growth, but I also want to cover some of that risk by investing in ETFs as well, because for the most part, ETFs are going to be the safer long-term play. If you're looking to get returns at about market average, an S&P 500 ETF could be a great option for you because again, it is really hard to beat the market. That's all I have for this video. I really just wanted to clear up what the heck an ETF was because whenever I first started investing, I had no clue either. So let me know down in the comments, are you guys invested into any ETFs? If you guys found the video helpful, feel free to smash that thumbs up for me and subscribe if you have yet to do so. It helps me out a bunch and I really appreciate your guys' support. Any other questions, leave those down in the comments and I'll get to them as soon as possible. I'll see you guys in the next one.